Energy Media readers, on Monday, the Prime Minister announced support for large corporations in Canada who are experiencing cash flow problems and may need bridge financing. And so a government Crown Corporation, federal Crown Corporation, will deliver bridge financing, and that'll be for oil and gas companies as well. But there are some strings attached, and to talk to me about those, we've got Richard Masson, who's an economist with the School of Public Policy in Calgary. So welcome to the interview, Richard.
Great to be here.
Now, there were a couple of strings. One of them is that there has to be climate risk disclosure and reporting. And some of the big companies do that already. Like Suncor has been doing it since 2017, and so that's not a problem. Some of the smaller seniors don't do it as much, and the intermediates don't do it as much. So they're just getting into it. So that's one string. The other string is they have to have a plan to get to the supportive of the national climate goals, which is net zero by 2050. Those are two pretty big strings for some of these companies. And your argument, I guess, is that that's an odd way to structure a emergency support program.
Well, absolutely. The crisis is happening. It's been 4 to 6 weeks since the federal government said they were going to come out with this program. They've now come out with it. So companies have been losing money. The prices have been very, very poor along the way here. A lot of layoffs have happened. Capital budgets have been cut. I saw an article today that said the total now is at $12 billion Canadian of capital budget cuts since the crisis started. And so companies are making decisions based on the information that they have, as they have to. So now this program comes and it says there's all these criteria that you need to meet. And if, as you said, a senior producer wanted to avail itself, it's probably pretty well positioned, because some, like Canadian Natural Resources, have already said they're committed to net zero in 2050. But many of the companies that really are going to be the ones who need this are the ones who won't have all of that in place. It's very difficult to get your management team to develop something like that, get it approved by a board of directors, even to understand whether that's wise for a company to do in exchange for a 6 or 9 month or 1 year long bridge loan. So, I'm sure there's a lot of consternation right now in boardrooms as they try to figure out, is this a program that can actually be supportive, and can it be done quickly enough to help them avoid many of the tough decisions that are facing them?
I've been watching the releases by the bigger companies, Big Five I call them, so Novus, Suncor, CNRL, Imperial, and Husky. And these are companies that have been doing this, climate risk reporting for a while. They've also been very diligent about getting their credit facilities expanded so that they can ride out some of these difficult times. Some of them have already lost billions of dollars in the last quarter. Is there any chance that the really big ones, the five I just mentioned, will need bridge financing, or is it more likely it'll be the other, 9 or 10 seniors, as we call them, that produce more than 100,000 barrels a day, and then those intermediates who are between 10,000 and 100,000 barrels a day? Who's likely to get, need this and have to satisfy those requirements?
I don't think the big folks, the big five, as you call them, are going to need this. So, for example, I saw Novus was able to increase its bank credit facility by $1.1 billion. So I think they have something like $5 billion of available credit. The banks understand that those big producers are viable long-term, and they want to make sure that they nurture those relationships. And so those big five are probably fine. So I do think it goes to the next level down of the intermediates and some of the juniors. Of course, some of the juniors are too small to qualify. $300 million of revenue is quite a steep ticket. So it'll be companies, the Tourmalines, Parex, Meds, Vermilion, Crescent Point. Some of those may be in this bucket. I haven't tried to do research on their individual situations. And then many of the drillers, the Ensigns and Precisions and PHX and Mullen and Secure and Tervita. There's lots of names that fit into this zone that probably could benefit and may really need it, because with all those capital budget cuts, as I said, especially for the service sector, it's tough times.
Yeah, well, isn't that the truth? And but I'm of the opinion, and I wrote this in a column the day after the federal election, and I think we've seen it with the the programs targeted at the small producers, and now we're seeing it with the ones targeted at the large producers, that climate is going to be part of everything the federal government does. And Alberta, as the biggest emitter on GHGs, and the oil sands as the biggest emitting sector in Canada, are squarely in the crosshairs. And I think Alberta has got to get used to this, because the ones that slip through the net this time will be caught somewhere else with another program or other legislation, in my view. What's your take on that?
Well, and it's a challenging thing, I think, because if you look at the Paris targets, I haven't seen viable plans for industries or countries to achieve them, right? We're still a long ways from getting there. And then they've now, talked about net zero in 2050, which is, 30 years away. So very difficult to conceive of what it will take to move to, being fairly big emitters as you produce resources to net zero. There is no pathway that any company can really put its finger on and say, this is what I need, nor can the federal government. I mean, it's a very aspirational commitment. So as boards, as you think about these things, you say, am I going to hook my corporate strategy to one of these goals? Because I'm going to have to report my progress towards it. And if I'm not making it, I'm going to have to say why. And I'm probably compensating my management team based on this. I'm having to disclose to my shareholders, my bondholders, the risks of not making it. And there's a whole level of complexity and stewardship that goes with setting objectives. You need to have a sense that you're going to be able to get to them. So I think trying to do that kind of thing in a very short term to qualify for bridge financing is really going to be a barrier for a lot of companies. And remember, this is a broad program, so it applies to tourism and it applies to airlines, and some of those are even further behind the oil and gas sector in their preparation for trying to develop climate plans.
Richard, thank you very much for this. I have no doubt that we're going to be talking about this a lot in the coming months, so we'll look forward to chatting with you about it again in the near future.
Great. Appreciate the opportunity, Markham.